10 days out from the IRS filing deadline. We wanted to talk through some of the things that we see people do that gets them into trouble with the IRS. And we're not talking about the big stuff like the lying or the cheating or the fraud or any of that, because if you're doing that, God be with you, so to speak.
Can't help you.
Yeah. But this is just stuff that happens. And when we think about the IRS, it really matters, to be responsive and to understand, when you have a problem with the IRS, it's a real problem that you need to deal with.
Right. I mean, and when people hear IRS problems, obviously they perk up and
Sure.
sit up still, but they're thinking audits, they're thinking of big, large tax mistakes. But in reality, most of the IRS headaches that people are experiencing, it starts with just very small missteps, easy things they could have corrected.
Yeah, things like delayed refunds, right? I mean, I know we've had a lot of frustration during the early days of COVID when folks were getting those refund checks, and some were getting them and some weren't. And then you can get letters, you can get months of back sort of back and forth type of correspondence from the IRS, because of course the reality for the IRS is they're pretty understaffed these days, and a lot of it is computer generated, and so it's hard to kind of talk to a person, if you will, in that situation.
I mean, this time of year, their phones are getting hit hard.
Yeah.
Everybody's in the middle of doing tax season. And so right now, the fact that they are understaffed is only going to make it worse. Response times are extremely slow. So if you got a problem, you're not going to fix it in 5 minutes in one phone call to the IRS.
No, that's exactly right.
Once something gets flagged, once something's amiss and the IRS is not seeing what you're telling them versus what they know, then everything starts to move real slow and a problem's brewing. Yeah,
so we're going to talk about some of the simple sort of practical things that you can do to either stay off their radar, or if you did get on their radar, what you need to do. And these are some sort of everyday issues, things like name mismatches or missing information or ignored letters, things people that that don't quite realize that, this can create a problem. That's
right.
For sure.
So we did our research because, we help a lot with our clients and their taxes, so we want to be on top of everything. What we found out is a lot of these IRS problems, they're not necessarily, cheating or tax fraud. That's not what they're looking for. Sometimes it's just a mistake that we or, the person who's actually filing their taxes, or because a lot of people are doing their own taxes, and that's right off the bat, that opens up a door for some concerns. But yeah, it's like you mentioned, it's not these huge things. It's little things that can be addressed.
One of the biggest things is just changing, and you would think, wait a minute, there's no way that this is an issue, but it actually really is. Changing the order of names on a joint tax return. You would say, wait a minute, that's crazy that's an issue. Folks, it is an issue. Don't change the order of names on a joint tax return. The IRS system tracks the primary tax paper and the spouse consistently. I'm sorry that's the way it is, but that's the way it is. Switching the order of those names on the tax return is going to confuse the IRS.
Correct. I mean, it's as simple as that, and yet we see that problem a lot. I mean, the other one, in today's society, we're going electronic. If you're not using direct deposit on your refunds, you're opening yourself up for a problem, because paper checks, IRS doesn't want you to send them a check, and they don't want to send you a check. So if you want money to come to you, it's got to be direct deposit.
Well, and that's certainly the case of just kind of what the system is that they're going to. It's so much easier to send out an electronic form of cash rather than an actual check. Another one is there's a lot of income that is non-taxable, but it still needs to be reported. We see this with rollovers. We see this with Roth IRA distributions. We see this with college account distributions. Health savings account distributions are a big one. Even though those are not taxable, and you're like, I don't need to worry about putting this on the return. Folks, it's got to get on the return. It's those kinds of things that if you don't put them on the return, they're going to make you potentially subject to getting a letter from the IRS that says, hey, this wasn't on the return. And here's the thing with those letters, right, Rob? I mean, when they send out a letter, they just assume it's taxable. It's up to you. The burden of proof is on you. So, but if you are putting that information on your tax return right from the very beginning, then you can avoid all of that. So you got to put that information on your return.
Which is the next common mistake people make, is ignoring these letters they get from the IRS.
Yeah.
IRS is telling you, we got a concern, we got to address it. And if you ignore it, it's not going to fix itself. And if you don't respond, you're stuck in the water. Nothing is going to progress.
It's always kind of crazy when we hear people say, "Oh, I got a letter from the IRS." I'm like, "Oh, when was that?" And "Oh, it was 4 months ago." I'm like, That's way too long to let that letter sit. 4 days is probably too long before you actually will read that letter and figure out, or at least attempt to start to put together a strategy. And then the other one, which comes up a lot, and again, these, you would think, man, these are simple things, like why do these create issues? But they create issues because the IRS is understaffed. A lot of the correspondence from the IRS is computer generated, and the computer is matching stuff up. And if it doesn't match, the burden of proof is on you to explain it. And so when you mail documents to the IRS, you've got to have proof of delivery. That burden of proof that you mailed them something is on you. So make sure you're doing like return receipt or something like that to make sure that you can provide that burden of proof that you actually sent the information into the IRS. That's very important.
Yeah, good point. Another thing we see is every year there's different versions of tax software you can use to prep your tax return. And if you switch from one to another, you got to kind of start from scratch and redo it again. So you got to make sure that anything carries forward. Whatever you were doing, whatever was on your previous returns or your previous electronic return carries over, so that you've got, if it's losses or a cost basis or IRA distributions, other things that they don't transfer automatically from software A to software B.
Well, that's one of the biggest reasons why, when we're onboarding a new client for our tax preparation service, which is a service that we offer exclusively for our clients at Nelson Financial Planning, we ask for 2 years of the past 2 years of tax returns. And oftentimes people say, well, why do you need that? That's a lot. I can't really get a hold of it. But that's why, because there's a lot of information that carries forward from 1 year to the next. That is for sure.
Right. And it's when people rush, when they're trying to do something quickly and they're not paying attention, that's where we see a lot of the mistakes.
Yeah, and that's where filing an extension. If you're unclear about something doesn't make sense, make sure you pay in your taxes by April 15th. But then filing the extension allows you to make sure that you're doing and reporting things correctly. We're going to take a break here on Dollars and Cents with Joel Garris and Rob Field of Nelson Financial Planning.